Real estate is about freedom, choice freedom, time freedom, and money freedom, and the impact you can make with that freedom. But it doesn't come without cost. Your freedom takes work. That's why Neil Timmins brings together the tools you need to build your real estate legacy, from tips and tricks to interviews with industry titans. It's all here in one place. Real Grit. Let's get to it.
What if I told you can make 20 times the return of a single family fix and flip on your next big deal? Well, it's actually possible. It's possible inside the world of commercial real estate. Say, I'm inviting you to this free challenge. It starts August 15th. It's totally free. It's a 5-day challenge where I'm going to take you and deep dive into the world of commercial real estate, more specifically, capital multiplier properties, what that is, how we identify them. I'm going to show you how to identify them, how to evaluate them, and how to lock them up risk-free. I'm going to give you all the paperwork to do it. It's totally free. You can sign up to join us at www.20xprofitchallenge.com/real grit. That's www.20xprofitchallenge.com/real grit. And I'll see you in the challenge. Coming up today, I've got Amy Sylvis. She's going to talk about how she went from 0 to nearly 1,000 units and a couple 100,000 square feet of industrial space in under 4 years. Doing that and facing challenges at a personal level you and I and almost nobody could even conceive of. Coming right up right now, Amy Sylvis. I've got Amy Sylvis here with me. Amy, how are you?
Neil, thank you so much for having me. I am fantastic. How are you?
I'm doing great. I'm excited to talk to you. It's going to be fun.
Likewise.
With your breadth of experience. So we're going to have a really good conversation, but take me to the beginning. We all started somewhere in this business. What was your entry point?
Entry point was reading that purple book that I think many people are familiar with called Rich Dad, Poor Dad. I had been relentlessly looking for a way to generate passive income. I didn't even really understand how I'd be able to divorce trading my time for money. Yeah. And yes, that book was the game changer.
What year was that?
That was 2009.
2009. Oh yeah. Right in the middle of the downturn, right in the middle of everything.
Yes. Yeah. Well, and I had just graduated with my MBA from USC. So I was on the fast track as a W-2 employee. In fact, got my MBA so I could be a bigger, badder employee there. So yeah, it was definitely a mind shift.
So you read the book, you put the book down, and then what?
I tried to buy a fourplex in Phoenix, Arizona. I'm out here in Los Angeles. So as many people in California do, they realize there's no way I'm going to be able to afford or cash flow anything in this state. So I went to kind of the next closest city that I thought might work.
Yeah, out of Phoenix. You said tried. I heard the word try in there. So elaborate upon that.
Yes. It took me 10 full years to try to get into this business, if you can believe it or not. So yeah, that was one of many tries.
So it took you a decade. You put the book down, took you a decade, and you're a decade later, and that becomes the entry point into actually acquiring assets?
Yes, during COVID, believe it or not. Okay. So go figure.
What prompted you? What was going on in your life at that point in time that either motivated you or freed you up to be able to actually go execute?
Yeah. So I was medically retired from my W-2 starting at age 36. Okay. So this was back in 2017. I was born with a lung condition called cystic fibrosis. And for those who aren't familiar with it, it's a pretty complicated lung deterioration illness, if you will. I was told when I was born in 1981, I'm 41, or my parents were told I would live to be 8 or 9 years old. Wow. So part of the illness was really fighting against time, trying to see how I could balance a W-2 in biotech, and also the full-time job that was taking care of my health in and out of the hospital for weeks and weeks at a time, treating virulent lung infections. So adding a third full-time job of trying to get into real estate, unfortunately, was a little bit too much for my health to handle. So we can go into depth more, but a miracle drug came to the market in 2019, right before COVID, that really unlocked my ability to enter into the industry.
Incredible. Before I go down the rabbit hole of real estate, tell me about how your parents are given that news, and obviously you far have exceeded that. How do your parents and how do you mentally cope? How have you coped with this for as long as you have?
Yeah, it's a really great question. Without a doubt, my parents have been formative in kind of this mindset. I don't have children myself. I cannot fathom what it would be like to have that type of diagnosis given to a child of mine. But the family really always had the mentality, and thankfully I learned from them of, what is within our control? What can we do? What are the nutritional, exercise, therapies? We traveled all over the country trying to find any information we could find for treatment. So it was really about focusing what was within our control instead of the countless things that clearly were not for so many years.
Our thoughts are always in our control. And so often people, shift to worry and doubt and fear. Even they all are choices. How do you maintain mental control over what comes in to have a positive outlook?
Yes. Well, in the 80s, I don't know how popular it was back then, but my parents put me in therapy. They put me in front of, what was I see now, a mind coach, my very first mind coach at 8 or 9 years old, to really, learn the skills that aren't intuitive to most of us of how to cope and how to have a positive mindset and a mindset that serves us. So I use some of those skills, but I also have daily rituals where, I focus on gratitude journals. I surround myself with people that have the same outlook as I do. So it is a daily practice and something I have to constantly work on, even though I think I'm decent at it, but it takes work every single day.
Do you think you would be as mentally strong or as financially successful, perhaps, if you didn't have to go through this as a child through your formative years?
No chance. It's a brilliant question and not an insight most people tend to have. Nothing in life is all good or all bad. Obviously, cystic fibrosis is something I wouldn't wish on anyone. And it's been a battle for me for sure. But there is no question that it has formed me and given me direction, purpose, and perspective I would never have without the illness. So part of me is very grateful for it.
Thanks for sharing that. I didn't know we were going to go. I didn't know this is the route we were going to go. I didn't know the whole backstory. So I think that's helpful. And certainly my hope and wish is it lands on somebody's ears just right who's tuning in right now.
That's why I love to share it.
Yeah.
Yes.
No, thank you. All right. So let's go back to the real estate path. 2019. Now you're in. What was the first acquisition? And then let's unpack it. But what was the first acquisition there?
Yeah. So the first acquisition was a 58 unit scatter site in Clarksville, Tennessee, about an hour northwest of Nashville. That was the first one. I was so excited. And I got it just before my 40th birthday.
That's terrific. Something to celebrate for sure.
Why not?
As if you needed something else to celebrate, right? Yeah. All right. So a scatter site, what was the source? What was the lead source? How did that come to be?
Yes, broker relationships. Had great broker relationships that even though, despite being in Los Angeles, one of the great things about COVID was everyone was, talking to each other from a distance. So it gave me a great, it was kind of an equalized the playing field for me, at least at that point, to be able to talk to brokers and build those relationships virtually.
How did you underwrite the deal? Meaning what are the steps or where did you get the education to underwrite it?
Yeah. So on that 10-year journey, when I was looking to get into the industry, I did decide to enroll in a coaching program. So that was enormously helpful. Despite having my MBA, my focus was in marketing. Right. I have an analytical mind, but specific, to multifamily real estate wasn't something that I really knew or understood. So that training and that mentorship was enormously helpful.
Did you, on that particular deal, what was it? What was the asset size roughly, dollars and cents?
Oh, yeah. So we acquired it for a little over $6 million. A
little over $6 million. Yeah. Did you bring outside investors in?
We did. We did. Yes. Just a handful, smaller deal, but yes, we did.
Friends and family, or did you end up having to go and strategically market to find folks?
Yeah, a combination of both. So I co-GP'd with an amazing group, and they had some folks that they had relationships with. And then, yes, I actually started some of my LinkedIn capital raising journey there. So some strangers were able to invest as well.
Yeah. Well, tell me a little more about that LinkedIn piece. What action was taken, and then what was that sequence? How do you end up raising capital through that vertical, to that channel?
Yeah, LinkedIn has one of the highest net worth participants of any social media network, and obviously it's got a strong eye towards professional interaction, networking, and things all career oriented. So I just started sharing my story. I started to share what we were up to, what we were doing. All SEC compliant, by the way. We all have to have a very strong eye in that respect. But it's amazing what can happen, particularly on that platform, when you have an eye towards just giving. People start to notice, maybe people you've lost contact with, friends of friends. There's kind of a great magnitude effect there. So I started to have people reach out and say, hey, what are you up to? What is it that you're doing? I'm looking for another stream of income. tell me more. So we got to build that relationship required for folks to be able to invest alongside me.
Yeah, no, that's neat. Debt wise, what did you end up doing and how did you source the debt for that particular transaction?
The debt was tricky. One of my biggest lessons on this project was the fact that scatter sites are much more difficult to get debt on.
Right.
So figured that out. But, we ended up going with what is called a CDFI lender. So these are actually, this is a national program from the federal government that trickles down to local banks. And so a local bank basically receives some subsidies from the federal government to serve kind of lower medium income tenants. And so we had an amazing loan to cost structure. Back then, interest rates were significantly lower. Right. So we were able to finance, not only around, I would say, I think 25%, 30% of the actual purchase price, but then also CapEx in addition.
Incredible.
Yes.
All right. So bring me forward a little bit. Now, at this point, you're closing in on nearly 1,000 units at this point, but you also have some industrial and some flex space in the portfolio as well.
Yes.
Tell me about a particular, any project or maybe tell me about the first one. What led you down that industrial, the flex space, and tell me about the first project.
Yes. So really a diversification play. I would say I am very well served by having different types of real estate. I think we all understand and have heard about this concept of onshoring, where manufacturing is coming back to the United States from overseas.
Yeah, giant
so
wave.
Exciting.
Yeah.
Yes, it is. It is. And the Kansas City, Missouri area is benefiting from that tremendously. Both, it is in the center of the country. The cost of living is extremely low. So I had a partner that I found that is boots on the ground there, that has experience. And we decided to partner up and purchase this 208,000 square feet flex industrial space in an area where demand is sky high.
Tremendous. It sits in the middle of the country. You've got tremendous rail access coming through there. There's a lot of, as you said, onshoring, but there's a lot of rail activity coming through there. They move it there and then they get on trucks and move it out from there. Yeah. Did it end up being, I assume at 208,000, is it fair to say it's multiple tenants?
Yes. 5 different tenants. Yes,
Okay.
That's exactly right.
5 different tenants there. Triple net structure.
Triple net, that's another great advantage, especially during inflationary times. So for those who don't know what that is, our tenants are responsible for taxes, insurance, repairs, and maintenance. So definitely a different situation than what we see in multifamily.
Yeah, no, it's terrific there. We certainly love that space as well. Tell me, dollars and cents, what was the purchase price there?
Oh gosh, I've been underwriting all day, so of course now my brain isn't working. I think it was somewhere around 12 million. Forgive me. I should know this off the top of my head.
You're good. It's funny because I've been doing the exact same thing today.
You're probably starting to see some right after.
You're like, it's been a lot of Excel today.
Yes.
How did you end up structuring? First, how did you find the deal?
So relationships. So I actually wasn't the person that found the deal. My business partner did. Yep. And so, yes, it was networking. We have mutual friends. So we had been developing a strong relationship with an eye towards working together. Sure. But so I wasn't the one that found the deal, but I found the business partner. Found the business partner
and finds a deal. How did you structure the equity and then the debt on that one?
Yeah. So it was a straight 70-30 split between passive investors and the GP, kept it really kind of clean and simple. Yeah. In terms of the debt, we got really lucky. We closed October of last year. So everyone can remember how crazy the debt market was and how things were changing so rapidly. Local bank debt, existing relationships. So 5.5% interest rate, 3 years IO. Really fortunate.
No, that's tremendous. And then for the equity side, did you end up raising some outside capital for the equity?
Yes, definitely. Yeah. Almost all through LinkedIn once again.
Isn't that incredible?
Yes. It's a lot of fun.
It sounds to me like you've got a process dialed in on LinkedIn.
LinkedIn's a bottomless well of equity. It really is. And it's just all about helping people fulfill their needs. There are definitely folks that this is not right for, but you can get exposure to some folks who definitely use our help.
You're right about that. Well, when you focus on being a deal maker as you are, and you deliver an opportunity to somebody else, there's plenty of people who do lots of other things super well inside the profession, and they need to place capital somewhere.
Exactly. That's exactly right. Yes. And people don't want to necessarily create another job for themselves. I talk to so many people who tried to do it on their own, maybe some single families, small multis, quadplexes, things like that. And oh my gosh, Amy, I didn't realize I've got a full-time job. I'm raising a family. I'd like some hobbies. And now I've got a whole other job for myself. I just want to passively invest. So it's not everybody, but we can help the folks that do want to make sure that this real estate game for them is completely passive.
You think about the alternative to that is they're investing oftentimes in a stock market, and most folks end up hiring somebody, a financial planner, a stockbroker, or whatever that the word happens to be that falls in that. They're hiring somebody. Most people are not doing that themselves.
Spot on.
Yeah.
That's a great analogy. Perfectly said.
Talk to me, what your team, what does that, pretty flat? Is it just you? Do you have other folks that do this with you outside of partners?
Outside of partners, I've got my husband, and that's about it. Yeah, it's just us.
Yeah. A lot can get executed when you're dialed in.
Absolutely. And this is a team sport. I mean, to your point, even if we had the capability to do everything on our own, I'm not sure that I would want to do that, just because I think, obviously skills can be, I'm not, despite thinking I'm Superwoman, I'm not amazing at everything, right? I have some things I'm pretty mediocre at. And so finding other people that's their superpower, we're just able to serve our residents, our tenants, and of course, our investors better by making sure we have a team that operates at a high level on all skills.
Biggest, thinking back over the last 4 or 5 years, biggest challenge, biggest screw up, biggest problem, biggest thing you've had to overcome when you're going from zero to the level in which you're now playing at.
So I mentioned that original property in Clarksville, Tennessee. First of all, not realizing that a scatter site was going to be a little bit more difficult to get lending on. Well, we had to get an extension on that property when we were under contract because we were having trouble finding the debt. All's well that ends well. But we didn't naively realize that the owner was going to neglect the property during that extension period of time. Yeah. We should have gone back and done re-inspections during that time, and we didn't. And what happened was twofold. The first thing is there was a leak in several of the units that ended up growing a lot of mold, putting residents in danger. And of course, we had a huge expense to remediate that mold when we figured it out a few days post-closing. So that is a massive lesson. And then we also, I don't really know how this could have been remediated, but we found out on that same property the day after we closed that there was a woman that had mobility issues and was wheelchair bound that the previous owner put in a second story unit. So she had to scoot down the stairs on her tush. Heartbreaking, to say the least. So I would categorize that more as a challenge as opposed to something we could have learned from. There's nothing we could have prevented it, but making sure she was safe and felt cared for and had access to a dwelling, that she could access on her own independently was something that was challenging, but we made it happen.
Taking back to the first thing you said there was the owner neglected the property once through that extension period. Knowing what you now know, what would you have done differently?
Yeah, we would have definitely asked to go back and inspect those units. Likely put that on our contract with this, with future sellers, saying we have permission to go back a few weeks before closing to re-inspect. I think that's imperative. I was just naive. I'll be honest.
When you think about this year and think about the next few years, where are you going? What's it look like for you?
Would love to continue to build out the multifamily and flex industrial space. I really still love those areas. I understand multifamily may be getting a little bit more skinny. We are in a different part of the market cycle, without a doubt. But regardless of what happens with the economy, we know people always need a place to live. There are always markets within the United States that are thriving, and we can really have a positive impact on people and communities in that sense. So we're going to continue to grow that out, serve our investors, serve our tenants, and do well by doing good.
Speaking of markets, do you identify markets? Is that a driver for you? Is the partner a driver for you?
Yeah, markets are first and foremost. Right. So making sure I do an obsessive amount of market research. I love it. Understanding, because that drives so much of our returns. Our business plan does too, of course, and how we operate the property, but markets and that natural appreciation can really skyrocket our returns. So yes, I identify emerging markets throughout the US first, and then identify partners that are active and have had success in that area.
Give me top 2, 3, 4 things when identifying a market. What are the top 2 to 3, 4 drivers that you're like, that's top of my list for what I want to see?
Sure. So looking at population growth, net migration, we always want that demand. Job growth. So a business-friendly area where companies are looking to relocate. We know job growth and net migration can often go hand in hand. They complement each other quite well. Unemployment rate as well. There can be a lot of great job growth, but unemployment rate can still be high. So we want to make sure, compared to the national average, that unemployment is below that national rate. And then crime. I think crime's an increasingly, unfortunately, thing that we need to keep a look at. And, that's not just on a city level, but this can really vary by submarket to submarket. So understanding that is a strong predictor, we feel, for success for our investments.
Yeah, no, that's great. Well, let's do this. I want to move on to the final segment, what I call for impact. Your favorite quote. I'm not afraid. I was born to do this. Joan of Arc said it. What about that resonates most with you?
I'd be lying if I said that there wasn't, some fear that's crept into my life on my personal and professional journey. And I think one of my second favorite quotes, I don't know who said it, is, feel the fear and do it anyway. I think part of mindset is acknowledging that there will be some things that we are fearful of, but I think a lot of us may be missing our destiny or our purpose here on this earth if we don't face it and move past it, overcome it. And there's so much greatness on the other side of it. So I just love that Joan of Arc so many years ago felt that way and understood that. And it really inspires me when I am feeling fearful.
What do you think holds most investors back from hitting their personal next level?
Passive investors or active?
I asked the question. I was like, she's going to ask me the question back. I already knew it was coming. Well, let's break it down. Let's do both because they are distinctly different. Yes.
I would say passive investors, I feel like education. There's perhaps a lack of control or maybe hands-on understanding of what this may look like. So writing a check, handing it over to somebody and saying, oh, you're going to get your money back in 5 years and we're going to operate it. You're not going to be involved. I can definitely empathize and understand how that can be scary or that can be a barrier to getting into this space. So, obviously, you and I have other ways we can discuss that and help people get over those fears. But I can definitely see why that would be scary for some folks.
Yeah. What about active investors?
Oh my gosh. I think there are limiting beliefs in this space. You see, maybe some folks have done a 4-unit, a 10-unit, and they think, 100-unit. How in the world am I going to be able to do that? Yeah. And truly, this notion that some of these real estate investing practices actually get easier the more zeros you have for units, because you've got economies of scale, more sophisticated property management, more doors in which to spread out. Maybe blips on the radar like I had with that mold remediation. Yeah. Scaling can actually be incredible. It's not perfect. It's not, everyone shouldn't jump into it without practice or education. But I do think there can be some mindset issues with growing and wanting to make sure that people don't, lose money or do poorly in their investments.
Outside of real estate, what are you most passionate about?
International travel.
You're all right. What are the top handful of places or what's coming up next, perhaps? I'll give you a couple different choices of questions.
Sure. I'll give you my sleeper. I think Budapest, Hungary is one of the coolest places I've been.
Okay.
Eastern Europe, they're not on the euro, so they're really inexpensive, incredible history, Soviet Union, Austro-Hungarian Empire, just fascinating people, great food, amazing history. So I would highly recommend going there. Where am I going next? I'm hoping to go back to, Vienna, Austria. My great grandma was born there. I feel strong ties. I don't speak German, unfortunately, but really great place. But you can pretty much put me anywhere on the map and I'd be a very happy camper. I just love to travel.
What's your favorite way to make an impact in the community?
So about 10% of people with cystic fibrosis don't have access to this miracle drug that I have. So we are fighting tooth and nail to make sure that there is funding and research because we don't want to leave anyone behind. You can only imagine what it's like to suffer, to take a breath every day and know that some people with your illness are breathing easier, but because of just how your genetics are made up, the drug doesn't work for you. So we really want to make sure that we don't leave anyone behind so everyone can live healthy and lives that are fulfilling.
Yeah, that's incredible. Deeply impactful. No doubt about that. Amy, it's been a great conversation. It's fun to hear how you got turned on to the industry and then took a little hiatus, if you will, in the W-2 world and then found yourself full circle here. And and now operating really at an incredible pace. I mean, closing on nearly 1,000 units at a point, and multiple 100,000 square feet of the industrial stuff, almost $100 million in assets. It's incredible, and you've done it in a short time frame.
Thank you. I really appreciate it. This was so much fun. Such a delight to add value to your listeners. I appreciate you. For people, they want to find you, they want to connect with you, they want to follow you. Maybe passive investors want to connect. Where can they go? What should they do? Perfect. Yes. So if you can remember how my last name is spelled, and I'm guessing, Neil, you'll put this in the certainly the links in the comments. I am very active on LinkedIn. I post daily. I try to educate. I try to add value. So please definitely connect with me there. And then sylviscapital.com. If you add a /webinar, you can learn a bit more about what we do, how we think through this passive investing thing, and you can get in touch with me there as well. No, that's terrific. We'll make sure we get all those links, including LinkedIn, a link down below in the show notes, everybody. Amy, I appreciate your time. Thank you so much. This was a delight. You bet. For everybody here at Real Grit, I'm Neil Timmins, reminding that real estate requires real grit. See you next time. What if I told you can make 20 times the return of a single family fix and flip on your next big deal? Well, it's actually possible. It's possible inside the world of commercial real estate. Say, I'm inviting you to this free challenge. It starts August 15th. It's totally free. It's a 5-day challenge where I'm going to take you and deep dive into the world of commercial real estate, more specifically, capital multiplier properties, what that is, how we identify them. I'm going to show you how to identify them, how to evaluate them, and how to lock them up risk-free. I'm going to give you all the paperwork to do it. It's totally free. You can sign up to join us at www.20xprofitchallenge.com/real grit. That's www.20xprofitchallenge.com/real grit. And I'll see you in the challenge. If you like our content and want more, you can access it at realgritpodcast.com. You hear it guest after guest. Instinctively, you already know it. But let me call it out. The most expensive action is inaction. The real estate market is full of opportunities. You just need to uncover them. You can build a business that lasts for years, makes monumental impact in the lives of those that you love. It's not just about business, but about the freedom you get because of it. Have you ever heard the saying, if you want to go fast, go alone. If you want to go far, go together. I believe that partnering is essential. In fact, I partner with hardworking investors all the time. The point is that you can get a lot further with the right partner. Let me say it again, the right partner. If you've ever thought about partnering with anyone, or if you have a partner now, I encourage you to download my free Partner and Profit Guide, which includes the top 5 must-answer questions to evaluate a profitable partnership. You can find it at www.legacyimpactpartners.com. I'll see you in the next episode.